Hello, welcome to European Open Briefing for Wednesday, October the 31st. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we're seeing a notable improvement in risk appetite this morning. Looking at equities, we can see all major indices are in positive territory. We'd already seen a jump in Chinese stocks yesterday after Chinese authorities pledged more measures to boost the Chinese economy. And yesterday we also saw a strong rebound on Wall Street with the major indices there closing up by more than 1.5%, and we're seeing those gains extending to the rest of Asia and in Europe, as well. In particular, the Nikkei closed up by more than 2% on the back of a weaker Japanese yen. We did have the Bank of Japan policy meeting earlier today, where they kept policy on hold as was expected, but they did also lower their inflation forecast, suggesting that they're going to continue with their asset purchase program for some time yet. And looking at dollar yen, we can see the impact of the weaker Japanese currency. Dollar yen reclaiming the 113 level for the first time in 3 weeks. We can see the dollar index yesterday, at the moment it's just below the 97 level. Yesterday it reached a fresh 16-month high. If we look at European currencies though, euro still struggling marginally higher this morning against the dollar at 1.1352. Sterling did fall sharply yesterday. It's making a bit of recovery this morning. It's up by 0.3% at 1.2740. Looking at the Australian dollar, we did have weaker than expected. The core measures, at least out of Australia for the CPI for the third quarter, fell short of expectations. The Aussie is down on the back of that data, as well as some weak Chinese manufacturing PMI. The Kiwi pretty much following the Aussie lower, though we did have some positive business confidence numbers out of New Zealand for October, which showed a slight improvement over the month in domestic business confidence. Looking at the Canadian dollar, it's slightly lower this morning. Yesterday, though, it did get a bit of a boost from hawkish remarks from Bank of Canada's Governor Stephen Poloz, who at a hearing in Parliament reiterated that the Bank of Canada will continue to raise interest rates. We saw the loonie rising sharply before falling back somewhat. Looking at commodities, oil prices are recouping some of yesterday's sharp losses. There are some renewed concerns about oversupply that's been weighing on oil prices. And looking at gold, it's now fallen to 3-week low, mainly on the back of a stronger US dollar. And looking at the main performers, apart from the commodities, we can see pound dollar is the biggest gainer this morning, and euro pound, Aussie dollar are one of the worst performers. Having a closer look now at dollar yen, we can see it's at a 3-week high of earlier touched 113.33. So the Bank of Japan didn't announce any changes to its policy, but they did lower their inflation forecasts. And Haruko Kuroda, the governor of Bank of Japan, did say in his press conference that the risks to growth and inflation are skewed to the downside, so that is heavily weighing on the Japanese yen. And of course, we also have a weaker pound and euro in recent days as well, so all of that has pushed the dollar index to a 16-month high of 97.06. Dollar index trading just off those highs from yesterday this morning. We also had yesterday US consumer confidence jumping to an 18-year high, though there was a downward revision to the prior month, which that had initially been an 18-year high, but now it's following the revised figures. The October's figure was the new 18-year high, suggesting that the US economy is able to maintain that strong momentum heading into the fourth quarter. Let's now turn to the Australian dollar. We did see the Aussie coming under pressure early in the day on the back of that disappointing Australian inflation numbers. Yesterday we saw the Aussie touching a 1-week high of 0.7122 against the US dollar. Is now currently trading well off those highs around 0.7085. Australia's annual CPI rate for the third quarter was mostly in line with expectations at 1.9%, just below the RBA's target band of 2 to 3%. But its two core measures, which the RBA watches more closely, fell even further below that target band. So that suggests that the RBA will likely stay on hold for even longer, with a rate hike being being pushed back even further. We also had weaker than expected Chinese manufacturing PMIs. We saw the official PMI falling to a more than 2-year low of 50.2, just above expansion territory. So all of that has been somewhat negative for the Australian dollar. And finally, having a look at the European currencies, the euro and the pound, both on a sharp downtrend throughout October. The euro is trading close to last Friday's 2-month low of 1.1332. Yesterday, GDP numbers out of the Eurozone disappointed. We saw a growth halving from 0.4% to 0.2% in the third quarter, missing expectations of 0.4%. We, of course, still have those worries about the Italian budget, as well as that news that Angela Merkel, Germany's Chancellor, will not seek re-election when her term expires in 2021. For sterling, there hasn't been any news, but investors are growing increasingly alarmed by the lack of progress in the Brexit talks. So a no-deal Brexit is still a strong possibility. So that is causing some anxiety in the markets. We also had a S&P warning yesterday that the UK could fall into recession if there is no deal, plus the usual caution ahead of tomorrow's Bank of England's policy meeting. We can see sterling currently trading at 1.2745 against the US dollar. And looking at what's coming up later today, we're going to have flash Eurozone inflation numbers, and then later on in the US session, we're going to have Canadian monthly GDP numbers, as well as the Chicago PMI out of the US. That's it from me. Thank you very much for watching, and have a great day.